Okay, this is Hejin Lee with another update for EOS, and I should have gotten this update a little earlier, but I have been just really busy. I'm surprised that I've done already a number of updates that I've done even yesterday and this morning, beginning at 3 in the morning California time. But it's far overdue for EOS. Sorry for the tardiness. It's been pretty busy for me. I've had a crunch time of client meetings, already exhausted, but I'm happy to see if I can put something like this out. And I'm going to combine this with another example of laddering in. But before I do that, I want to give a quick analysis of patterns and Elliott wave analysis. So here we have I got rid of all the prior markings. I want to make it as clean slate as possible. So I immediately see here a cup and handle pattern, which I'm going to try again one more time. It isn't the most prettiest symmetrical pattern. My mouse is not working the way it's supposed to. Let me try one more time. There you go. So here's a cup formation, and then I've got the handle in the form of a triangle. And it broke upside to that. And this is very interesting because now we have EOS going to $1.66. As high as $1.66. And you know, the number of people who are saying EOS is a scam, it's got a 2 million coins per month, new coins inflation, it's not worth buying, there's no platform, it hasn't even launched yet. I don't give a shit. The reason is because all of that is fluff and nonsense to a technical analyst. We really, a pure technical analyst, we really don't care about the fundamentals. We're not debunking the fundamentals. We just cannot pay attention to anything like fundamentals, news, or events that are downstream from sentiment. And since technical analysis measures price action, which is the most closest reflection of sentiment, more upstream reflection of sentiment than news, fundamentals, and events, which are also reflection of sentiment, but price action is more upstream. It precedes, in many ways, the news and events. But many people have grown up in a Newtonian sense of world with cause and effect, so that they believe that news causes price action. Sentiment causes price action, not the news. Sentiment causes news. And from a sequential point of view, I believe, and technical analysts believe, that price action is more upstream than news and events and fundamentals. And that is very, very important in my opinion to understand. So here we have a cup and handle. Beautiful. And it busted out of the handle price. we also have the massive correction that we saw complete. Now I'm starting to do my Elliott wave analysis. Okay, so this was a huge, talk about a hurry up and wait. Talk about a hurry up and wait. So this was an A, B, C, D, E, and it busted out. So let's count this. You should be able to count this by now. And I'm seeing 1, 2. I think this wave, third wave, will take us above this cloud of resistance here. So I see a bit of a fractal. Let me tell you, let me decipher that for you a little bit more. Okay. What I mean by a fractal is this is like a, if you've ever studied organic chemistry, this is like a mirror image of a molecular structure. What I mean by that is, here's a triangle right here. All right. Just like here, except instead of breaking up, it broke down. And the breakdown far exceeded the lowest point by twice. And here is the break up, and it'll exceed the highest point by twice or more to give us maybe a 3 right here. So this is going that way, this is going this way. Do you see the fractal? So I think this is beautiful. Can you imagine EOS at 322? Even with 2 million coin inflation a month, sentiment has no bounds and limits. It couldn't care less. Once sentiment makes a decision, and I think 546 will not be much of a distant hurdle either. Okay, so we covered the pattern and the Elliott waves. Now let's see if we can do a laddering example here. For that, I'm going to do a higher resolution microscopy. Let me get rid of the waves and the labels. If you want to ladder back in at this point, it'll be a bit interesting because you are on wave 3, which will be pretty quick. And hard to catch, basically. That's what I'm saying. It'll be hard to catch. So I'm on a 15-minute here. Price is here. What I would do is I would take right this point, this tip, prior high from the left, draw a line. In fact, I would lower it to that support as a rung in the buy ladder. Okay, this is at 139. So here's 139. And then I will go to the top. So I go to the stronger support below the current price, which is about here, and the current price is about here. And then I go to the next the most recent top in that time zone, degree of time, 15 minutes. Most recent top is here. Okay. And that's $1.65. So again, I go to for the current prices, I go to the next below bigger support that I can find, which I did at $1.39. Then I find the next most recent prior peak, which I did at $1.65. These I'm going to color white. So within that degree of trend of that time zone, 15 minutes, I've now given myself a brief min and max range. Okay, in this range, I'm going to find a support zone right here. $148.25. I'll just make it $1.48. So now I have three rungs, buy rungs, R-U-N-G, like the rung in a ladder. And then I'm going to find around here a support zone, which is pretty close to the current price, right there. $1.59. All right. So now I have four rungs. Then now I'm going to go broaden my min-max. Right here is another major support. $1.21. So I'm going to put in another buy order at $1.21. Okay, see how this is a good support? I use primarily horizontal supports, as you can see. Most technical analysts forget to use horizontal supports, and they primarily do like angle supports, draw support lines on an angle. For laddering, those are pretty useless to me. I primarily use local support and resistance on a horizontal line. Look, I just found another pattern here. Look at this. It did an ascending right triangle right here and busted out of that. And look, it met one of the minimum, holy cow, very close to the minimum travel on that ascending right triangle. Okay. Then I'm going to do, I don't see anything above me here. So I'm going to temporarily zoom out back to 1 hour. And I want to see what's on this side. There you go. I want to go further back out. Okay. And this here is a major support. Going all the way here. Cool. That'll be a good buy point. It'll most likely bounce off that if it does go there. And here is this. And here I find this right here, this zone. We'll draw a line right, parallel line as best I can to there. Boom. $1.69. But you know what? That's a resistance, so I want to go a little bit above that resistance so that once it breaches it, because it might just bounce off and stay down, but I want to catch it when it breaches it, which gives me better confidence that it'll continue going up. $1.69. Another buy entry point. Now how many rungs do I have? I have 1, 2, 3, 4, 5, 6 rungs. All right, let's go back here. What's this right here? Okay, this looks like a very good resistance to see if I can cover. Now here, I'm going to cover as a blue. A blue line means an extremity line. $1.77. Good. Now I have 7 rungs. And in this support and resistance scheme, because this head and shoulder ascending right triangle was formed, I'm going to put one right here, bottom of that triangle, and make this my lower extremity. $0.91. All right, now I have 1, 2, 3, 4, 5, 6, 7, 8 rungs. 8 buy rungs. Now, what is the chance that every one of these rungs will be filled? It'll be pretty slim. But that's the beauty of this laddering technique. It takes the emotion away. Why and how does it take the emotion away? It's because when you ladder, when you scale your entry in like this, you get rid of the buyer's remorse. How often have you bought, let's say you wanted to buy 1,000,000 shares of EOS. Well, I'm sorry, let's say 1,000 shares, make the math easier. You bought all 1,000 shares in one fell swoop, single transaction. Let's say you bought it right here. It's almost guaranteed that the price will then go below your buy price. And it'll go lower, and it'll go lower, until it starts making you maybe a little nervous. But you'll say, nah, that's okay. EOS is a good coin. I'm a hodl guy. I'm just going to hang on to it. And it'll go lower and lower. You got a $1.65 issue, so now it's $1.48. Now you're thinking, oh man, you're calculating how much money, paper loss you've had. All right, and you're thinking, geez, that's not a very good feeling. And it's going to go lower, and maybe it goes to $1.39. And you're thinking, man, why is it going down? You start looking for fundamental reasons. You start digging on the internet for news. You're talking to friends, go to chat rooms. You want emotional support, psychological support. You want to almost find other people who are losing money with you, because that makes you feel better. Misery loves company, right? Well, that's the buyer's remorse that the laddering technique almost eliminates. Why? Here's the weird thing, but good thing about laddering. Let's say you make your first, and let's say price buys at 165. You buy 100 shares. Price goes lower, triggers your $1.59. You're thinking that's cool. All right, I got another 200 shares now. $1.48 gets triggered. And you're going to be thinking, wow, it's going lower, but you know what? Weird, I feel good about this because I'm getting $1.39 gets triggered. I'm getting really lower and better prices. You're almost overjoyed to see the price go below your very first buy price. It's counterintuitive. Most psychological cures will have to be counterintuitive, because it's outside the realm of the Newtonian environment we have grown up in and we are so accustomed to. And this kind of counterintuitive technique like laddering is a very non-Newtonian method. It's almost quasi-quantum method because it eliminates emotion. The feeling that you feel on an individual basis doesn't necessarily represent the overall sentiment. That's why trading is so hard. You cannot trade based on gut feeling. It doesn't work that way very well. It's not consistent. More importantly, it's not reproducible. Everything is error prone. Everything is probable or possible. And the fact that you'll probably get this, and then price turns around, let's say, which means you don't have this and that rung filled. And after a while, in the beginning, the newbies will think, oh boy, I missed 2 rungs. What am I going to do with this leftover money? But the more seasoned you get, you're going to think, that's cool. That is the inherent, innate nature benefit of this laddering technique, in that it is unlikely for every rung to be filled. You're going to say, that's cool. I have cash. It almost forces you to have cash at hand. Using this method with unlikely rungs to be filled and most likely not be filled, you'll only get 3 to 4 rungs filled, will almost force you to have cash at hand. It will not always allow you to have all of your wallet dumped into a position. Even if you're diversified, if you have no cash, no bueno. That's what I learned here in San Diego. No bueno. Not good. So this is a ladder that I would have right now. You might only get 1, 2, 3, 4 filled. Beautiful. The other thing that this laddering technique gets rid of is prevents you from being too piggish. One thing I agreed with Jim Cramer, the madman, was that bulls make money, bears make money, but pigs get slaughtered. When you get too piggish, and subtly the piggish emotion can affect how you make your ladder by making your min-max too narrow, so you almost get all of your ladders filled, the rungs filled. In fact, you want to make it so that a good number of your rungs will be very unlikely to be filled. That's another key to take home. A good number of your rungs should be made and designed at a level so it'll be unlikely to be filled. And in the unlikely event that price does scoop down and back up again, it will get filled. Fine. So this kind of laddering has to be done with some practice. So if you want, you can cast a ladder like this and see what happens. The other beautiful benefit of this laddering is you can cast it and walk away and see if they get filled. So I hope this has been helpful. And at the same time, I hope if you want to try this exact same ladder, you're more than welcome to. And at the same time, I think if you want to modify it, you're more than welcome to. Now, how I distribute the money, I usually do it evenly, let's say. That's the easiest way. Let's say I want to buy 800 coins. You can assign 100 to each rung level. One thing you don't want to do is like do 500, 200, and redistribute the rest of them around the outer rungs. That makes it disproportionate. It doesn't really take away that emotion factor. You can vary it as much as you want, but you got to be careful at the same time. You want to make it practical. Again, when you assign 500, 200, and the rest of it divide, that's subtle action of the piggish mentality. Greed can be very sneaky. Greed has a very compelling and convincing justification for everything it wants and does. And laddering overcomes that if it is done effectively. All right, this video is getting long. I wish you all massive, massive profits. Thank you.